Everyone's really looking to the UK and seeing the macroeconomic environment, which is being painted by the media. And we hear of very concerning reports with regards to possible recession down the line. We know that growth only clocked in at around 0.5% for the third quarter. But a very different picture that you're painting at capital shopping centres, because demand and we're still seeing shopping centres doing really well and your assets growing.
Yeah, I think the macroeconomic picture clearly, both the UK and across Europe, is very cloudy. But the good thing is that we're in a very defensive, consumer-oriented business. 300 million customer visits every year. Take Lakeside, one of our shopping centres, 25 million customer visits a year. Yeah. That holds up pretty well in a downturn.
You have a 97% occupancy rate at this point in time.
Yeah, and that compares with a vacancy rate across the UK as a whole, which is around 15%. So we're doing much better than the whole market, and I think that's a function of the fact that shoppers like to go to these large centres with a strong catering offer.
So it's all about quality assets?
Quality assets, lots of food and beverage. Trafford Centre has 65 restaurants, plenty of places for the family to go and enjoy themselves.
You're currently in negotiations with Westfield for Nottingham's Broadmarsh shopping centre, a deal that could be worth around £55 million, and you're hoping to acquire 75%.
Yeah, Nottingham's a big city in the UK. It's the 6th largest city. We've had a presence there with a shopping centre called the Victoria Centre for a long time. We're now very happy to have done the transaction with Westfield to acquire the other centre in Nottingham, and that gives us a lot of flexibility in terms of timing the development opportunity in Nottingham, which is immense. And
with regards to occupancy rates within the Broadmarsh shopping centre, is it at decent levels?
Broadmarsh has been being prepared for a redevelopment. So now that we've acquired it, we can get on with sorting out the development requirements of the city as a whole.
And David, of course, you are listed on the JSE as well. Give us an indication of what investors really ask whenever you make a trip here to South Africa. Is it really about the macroeconomic environment? What are your plans with regards to the South African market at this point?
I think they like capital shopping centres because it's a round hedge. They like it because it's a quality asset, UK real estate. And I think they're reassured with the defensive nature of the asset. And we've actually had a very, very stable shareholding base here since we first listed, which is over 10 years ago now.
With regards to more acquisitions down the line, any plans? I'm sure it must be quite a good time to find those great deals.
Yeah, I mean, I think the banking sector clearly has a legacy of assets that they've lent to over the years, and now they've got some issues with, and I'm sure there will be some opportunities in the coming years. Yeah, plenty of work there.
David, are you concerned about prospects going forward? Because we're still seeing this Eurozone crisis playing out quite extensively, and we know the UK, even though it's not part of the Eurozone, it's still very sensitive to some of the movements that we see there. We know that austerity measures might be a very big issue down the line. Is there any concern, though, that could change your fortunes?
I think what we're concentrating on is making sure the business is performing as well as it possibly can in the environment at the moment, and to prepare ourselves for better times by building up a good bank of development and redevelopment opportunities across the whole estate, and I think those opportunities will come through when times improve.